Hi folks, Lee Gettess here with the Market Sense for the week of February 2nd, 2016. We're going to stare at some charts that come from that Trade Navigator software. And the first chart is a weekly bond market chart. And how are those interest rates doing? They run the opposite of bonds, and boy, bonds are going up through the stratosphere here. They have held around the 161 level, which was this upper moving average here. And the logical area for resistance was around 62.16, and they've blown pretty much through that. They're actually trading above the upper Keltner band at this point. They could go anywhere. It's silly to pick a point up here and assume there's resistance. They are clearly getting into the nosebleed section, but trends always go a lot further and faster than anybody thinks. So I'm not going to pick a point up here where they're going to end, but they are getting a little dangerous. If you're not already long, this is no time to be buying, I don't think. We do have 3 days worth of employment data this week. So could they have a complete crash? Yeah, sure. They could come back here to the middle moving average around 59.12. They could go all the way down to 57.08 here at the lower moving average. Those are possible. They're just not showing any signs of that. They look awfully strong. They have looked that way virtually since the Fed raised rates. And I think this is an indication that the bond market doesn't really believe economies are that great anywhere in the world. But for now, they look like they're going up. They're certainly outrageously high, a little overbought at this point, so caution is urged. But man, I wouldn't jump in and try to sell them yet. The stocks have a completely different circumstance, not just because they've broken down, but because this week so far, well, it could possibly be over with. I doubt that, but we've got resistance up here in the 1929 area, which they have kind of held fairly well. And we've got support in the 1888 area, which is very close to the low they made Tuesday. So it's not out of the question that they're just stuck in this range right here, and that's it for the week. Given the volatility of the last few weeks, they're certainly due to have a smaller week. However, again, this is the week of 3 different employment reports, culminating with Friday's monthly employment report. And they tend not to take those quietly. So I think there's a chance that we break this 1888 level, which would give us a target down here at around 1835 at the lower moving average. And I gotta say, if they get that low, I would be surprised if they don't go do a full-blown test of the lows down here at the 1800 level. But 1835 is the next support if they should break hard. If they really get going, oh gosh, we're looking at probably 1960 here as the projected high. There's a reason why that could be pretty good resistance if they get there. They don't look terribly strong. I think the likelihood of them going down is probably a little greater. But again, employment reports. Seriously. Does anybody really know how to predict how they'll react to employment reports? So, that's what we've got for you today. I hope you can find something profitable to get yourself